All right. Hey, everybody. Welcome to Monday the 8th. I'm trying new technology again, so let's hope all this works out. I'm going to upload it to all the appropriate platforms. My name is Nathan Graham. Thank you so much for tuning in. Hey, I'm just a local realtor. I want to touch base about a couple things before we dive right into it. So I'm just a local realtor here in Durham region, also covering like Lindsay, Peterborough, Port Hope, all the rest. I just wanted to start actually giving everybody just market information. And that's my goal of these videos. So hopefully these aren't too annoying. Please, I want to let you know two things. First of all, if you like it, I'm going to do more videos on YouTube. So like and subscribe. That way you'll get notifications of the update. And that way you're not going to be spamming your email box. Also, though, if these are super annoying, please, I don't take offense to unsubscribing. I might know you in person, so don't freak out. I just, as I said, I'm going to send these out every Monday. I just want to keep you updated with what goes on. Okay, so let's dive into it. We did a little bit of a 2023 conversation about kind of what was going on in the market. We've been talking about bond rates and all the rest, which I don't even have up today, but I've been checking them. They've been pretty boring for the last week. So bond rates kind of seem to stabilize around that 3.2, 3.3 range, is kind of fighting back and forth, meeting some resistance in today's open. But all this basically means is that the lower bond rates are usually it's a precursor to lower interest rates. And we talk about that enough, so that's kind of probably boring. Here's what I do want to talk to you guys about, though. Let's see, new technology. Let's add to the stage Google Finance. By the way, great advertisement. I don't actually get to figure out these advertisements. They're just going on. So anyways, Bank of Canada expected to cautiously start cutting rates in spring. Okay, so one of the reasons why I'm doing a lot of these videos is because a lot of us have fallen on economic hard times. Our mortgages have massively increased. We have renewals up and coming, and this creates a very huge degree of uncertainty. We do have some people that are jumping the gun per se about fear that their rates are going to keep going up. So we do have people that's kind of jumping the gun and selling their properties, and I don't want you to fall into that category necessarily. So let's see. I want to give you this information. The other reason why I'm trying to share all this is because if you are on the fence about buying an investment property, buying a home, thinking about buying or selling, there's a lot of FUD, fear, uncertainty, and doubt. That's what FUD is, by the way, in the markets and in the news. And they're telling you not to do it. Well, I can tell you over the last year, we've pretty much seen a consolidation period of housing prices. I don't expect them to go down any lower without a major event happening. As a matter of fact, everything we see is kind of priming up to a fantastic winter spring market. So to kind of touch on that, actually, before we dive into the article, we had a house that we listed back in November. It was a little bit over market value. It's what the people needed to get. And this week we got 2 offers on the property. So this is exactly what I'm talking about, that our market is already beginning to pick up completely. News like this is only going to make it a crazier market. So if you're on the fence about buying, now is the time to get out, get looking, because with news like this, the market's going to start inflating again. So keep that in mind. That's your warning. Anyways, let's talk about the news. So Bank of Canada, basically economic rate, they're looking at cutting the benchmark rate down to 4.25 by the end of the year. So this is going to be some relief with those people with variable mortgages, anybody who on your loans, your credit card debt, and all the rest. So this is kind of fantastic news that we see this beginning to happen. The first cut, which would in theory be 0.25, looks like it's going to be happening this spring. Now, remember, the U.S. has come out and said that they're going to start aggressively cutting rates this year. Bank of Canada said, first, whoa, we're not going to follow just because the U.S. is doing it. And then now all of a sudden they're like, okay, maybe we'll follow an itsy-beansy little bit. So I don't know, mixed messages, I can tell you. Anyways, so this is kind of what the Bank of Canada is forecasting, down to 4.25. It looks like a lot of things are beginning to ease. Now, I do want to warn you, inflation is still a problem. We're probably not going to see the returns of inflation for a little while. So it's not like prices are going to go down and all of a sudden you're saving money absolutely everywhere. We're just beginning to see the market stall and get really boring. Now, other people, though, other banks, like Bloomberg, for example, which is obviously not a bank, but Bloomberg, TD Economics, CIBC Economics are expecting larger cuts in this. They're expecting it to potentially be down to 3.75, 3.5 by the end of the year. And I think that's quite the possibility. I'll be honest, I'm kind of on the side more. I was hoping by the end of the year we'd be sitting around 3.754. I do think the way we're already beginning to see this trend is absolutely fantastic for rates coming down. So I'm going to post this article in the email so you'll have a link to it. I realized lately that's not something I've been doing. Sorry, let me remove that from screen. I realized that's not something I've been doing, but I wanted to share the good news, because the good news is if you're up for renewal this year, holding off is not the worst thing in the world. If you have a variable rate and you've just been pushing through it, it looks like we're going to see relief. Now, again, word of caution, I highly, highly doubt anytime soon, like next 5-10 years, we're not going to be seeing 1.5-2% interest rates. A 3.5 interest rate is a very, very good place for our market to be. So that's kind of what we're expecting. Like, I'd love to see it hover between 3.5 myself. I think anything lower than that just fuels the market and creates the craziness that we've been seeing. Again, though, I'm going to caution this, and I'm going to sound like a broken record, and I'm sorry in advance, but I've seen in my 14-year career, I've seen way too many times people waiting for the best time to buy. And I think we're about to see a resurgence. Like, unless something dramatically changes in what we're seeing in the market, we are definitely going to be up for a hot January, February, March, April, May, till about Easter weekend. For some reason, Easter weekend last few years is when the market seems to hit a little bit of a wall. So hopefully short, quick, beautiful video here. Please, if you have any questions at all, please reach out to me or reach out to your realtor. This is the other thing too. I may not be a realtor. Go talk to your realtor, reach out to your realtor, and having this conversation. If you need to have this conversation, we can have it via coffee. We can have it via internet. However it works out best for you. Please reach out. Do not miss this market. Again, I just want to remind everybody, it goes a long way if you do like and subscribe to this channel, as well as I'm going to be doing this as a weekly newsletter into your email box, but I am going to be updating the channel a bit more as we see news come on. So for example, I'm probably going to shift over to the channel now to go more in depth about what's actually happening in December stats. December stats are boring usually, so that's why I'm not really doing it here, but I want to talk about December statistics of what happened in the real estate market as a whole. All right, chat with y'all soon.